Yeah.
Thanks.
Yeah.
I guess first question is, there's probably 3 or 4 competitors in this space,
Yeah.
I think, that are trying to enable retail or whatever you want to call this type of investor for this type of trading. How is this platform different, and is that differentiation sustainable?
Yeah. Without naming names, I would say that there are some people, especially in the FX space of all assets that you could be trading, securities you could be trading. FX seems to be having the most people moving in this direction. So prior to us, MetaTrader, NinjaTrader, these are places where you can, their thesis is that we're going to make programmatic trading available to the masses by making programming more easy. They do this by making a watered down, or what we call a pseudo programming language. It's easier to learn than Java, but it's still a programming language. And it's not visually based. So we're just different from them in that regard. You don't have, our thesis is that, a trader who does not want to learn anything other than just logging in for the first time and saying, like an Apple-like experience, like just express yourself intuitively, start dragging and dropping these things and not have to read a book or anything like this, and that'll be great. And there's a couple people on the periphery that are starting, that maybe have done this in the institutional space or starting to do it, but I wanted to just kind of show how they do it. That's not a good example. How they do it is they have widgets that you can drag and drop, and they're kind of like this, and they're kind of like this size, and you kind of drag things out like this, and you draw lines to one another. And that expresses, okay, well, this widget occurs, then this will do that. And those lines express linearity. And that gets complicated when you have more than one condition. And what we say is, well, all you have to do over here to make something very complicated is I drag out this and you can make all the conditions you want and just keep putting them in there. And because it's visually based, it's very easy to read these larger algorithms. And I think for the competitive advantage, what's going to keep us ahead is we're going to start pulling in all sorts of different crazy trading data that you can trade off of. And because we allow people to express things in a very complex way, and in such a large way, you can consider 5, 10, 15 different factors for buying or selling and do it fairly easily, we think we're going to have a very strong edge in the market.
So thanks.
Sure.
It looks like we got sucked into the product demo vortex. And so the product sounds very interesting. Let's talk a little bit about the business model.
Sure.
Go to market.
Yeah. Okay, so last summer we launched a beta of this. Beta for us means building, backtesting, paper trading, no live trading. We built this in stealth for the 2 years leading up to it. The first day we launched our beta, Fortune broke the news. We were on CNBC with a 6-person panel discussing after the close, how we're going to change markets. What was scary to them was, oh, is this powerful algo building software? Is this like giving a machine gun to an 8-year-old? Is it too powerful? Should this be left in the hands of professionals? And that's what the whole controversy was. 3 weeks later, I got invited on to go defend the point.
So let's parse it. So the business model, how do you make
business
money?
Model. We make money by introducing trades to an executing broker-dealer who pays us on the back end. So we're completely free to the user, and if the user pays a commission to FXCM for X amount, that's not going to change, but the thing is FXCM is going to pay us on the backside after the trade goes through. So we make money on commissions. Yeah.
Okay, and so the go-to-market then is to integrate with the large...
Which we've done initially, yeah.
And so talk a little bit about the uptake on the product. I know, so you mentioned MetaTrader. They've had a hard time just getting people from their old product to their new product.
Yeah.
So the inertia in the market and being able to get people onto your platform.
Yeah, so we're a totally different style. I mean, as you can see, like we're New York-based startup. I'm a startup kid. I'm not like, MetaTrader is like a Russian oligarch with $1 billion came here and started something. Like, I graduated from college just a few years ago. I started this my senior year, basically while I was eating pizza and drinking Mountain Dew. Like, and we've been funded by angels. Like, we're totally like, startup community. So we already have like a differentiated kind of feel and offering. And as you can tell, it looks different. We're Web 2.0. But in terms of our usage, we have 4,500 traders that are on the system that have signed up organically. We're not doing any advertising and marketing. And we just, in the pilot program for live trading, we brought on 50 live traders. The adoption's been very good. Basically, the key thing you want to think about as a business model is how many trades are you doing. And even though we're not high frequency and we're not doing anything reckless by like trying to offer like something that trades a lot or tell people how to trade, people are naturally trading. The average trader is doing 40 trades a day. So 40 trades a day is about 20 times higher than the average trading platform does without us. And we have guys doing multiple 100 times trades a day, and it's really good. Yeah.
So we got about 4 minutes left, guys. So Samir, you want to ask a question?
Yeah, I got 2 questions. One is platforms like MetaTrader 4 or NinjaTrader have gotten obviously a big head start in the market when you're talking about FX, but one of the things that has helped them grow is they've developed huge ecosystems. And we're talking third-party developers that have helped push their platforms above and beyond, and created demands for brokers like myself or for me, if the demand's coming to me to say, hey, yeah, I need that product.
Yeah.
How are you going to compete with that if you're just offering up to brokers and then really counting on the broker to help you in terms of distribution?
Yeah. So Samir works for FXCM. So to answer this question,
thanks for hooking up for us, by the way.
I have to say, so FXCM's your boss Drew Niv hooked up to us originally because he thinks we're, in his words, MetaTrader 4 is killer. We're going to be the real first competitor against them. And how we're going to do it, I think, in this cottage industry is what we call it, like people building all around it, is we're going to open up our API and pull in all sorts of different trading data. So all of the fintech companies out there, except for us and maybe a very few, like top 5% or something like this, are building data companies over executing trading platforms. So they're saying, here's a way you never looked at data, and it's going to make you trade better if you look at this data. It's very important to you. We're saying whether it's Twitter sentimental analysis or lunar cycles or railroad times or emerging market data, pull it into here and build or build a trading algorithm, put it in here, and we're going to make it available through a widget module, and people are going to be able to trade off of it and drag and drop.
So another question on just the unit economics. So
Sure.
How are you analyzing kind of cost of acquisition? Are you internalizing any of that versus long-term value of a client? Have you had your clients long enough to understand what the attrition looks like?
Yeah. Honestly, I don't have like quantitative answers on that. It's very early. We haven't done any investment into actually getting users. It's all organic, so it's still just early to say. I can say costs of maintaining a client. There's data costs and there's server costs. And those are like a big cost we have to consider.
And then I guess the follow-up, what's the strategy? So no, you don't have a lot of data today, but what do you expect a year from now, 2 years from now, if you started to model it out using analogous business models?
Yeah. So basically, I'd say that one of our most difficult times of being a company is that we built this platform, and no matter whether it's a new trader or a very sophisticated trader, most people are excited by it. They say, wow, this is something I could never do before, and I hope to use it. And it's been very distracting to get institutional interest and things like this, and we really decided we were meant for the retail from the beginning. And we had to stay true to that core, and basically our go-to-market is active traders, sophisticated traders, and low and mid-tier institutional traders. So, guys that might have starter funds with $5 to $10 million that aren't going to actually hire quants or do things like this, they come here and they can build their strategy. And our strategy to get them is heavy emphasis on education, meetups, things like this. Of course, like organic, outbound marketing and things like that we can do online. But actually, we're going to be fully integrated this fall.
Got about 1 minute, guys.
We're going to be fully integrated this fall into Fordham's finance department, and professors are going to be teaching this as a way to start thinking about the market and trading, because it's very intuitive, it's very easy, and they can literally give homework on backtest, in the crash of 2008, and see if you can make money, and how would you do it. And so we're going to be pushing this academia route a lot too, because we're going after millennials and things like this. Yeah.
Great.
Thanks so much.
Any final thoughts in the last 20 seconds, Chris?
Sign up for RISM sometime soon, and I appreciate your time. Thanks so much, guys. Yeah.
Thanks, guys.
Yeah.
So while we're changing over to the next innovator, I wanted to give each of the inquisitors an opportunity to say where they work, what they do, and kind of why they're on the panel. Should have done that before the first innovator, so I apologize for that. I got caught up in explaining the format. So if you guys just want to take, maybe 30 seconds each and explain, who you are and where you work and what you're doing on the panel exactly. So thank you.
Thanks, Matt. My name is Samir Bople. I'm the Chief Marketing Officer at FXCM. I've been there over 10 plus years, so I've pretty much been in the market since the very beginnings. I've seen every product in the market there is today that's come by in relation to FX cross my desk at one point or another. So I'm glad to be here and hopefully give these guys a little bit of a hard time and see what they have to say.
Hi, I'm Michael Koppelman, a general partner with Edison Ventures. Edison is an expansion stage venture capital investor. We've been around for about 30 years. We're investing out of our 7th fund. It's a $250 million fund. Of the nearly 200 investments we've made over the last 30 years, about 40 are in financial technology. And that's pretty broad, covering trading and capital markets. We were an early investor in Gain Capital. We're also an investor in Trader Tools on the institutional side of FX, an option trading platform in Chicago, all the way to wealth management, payments, and consumer finance. So it's a pretty broad portfolio. I'd say we have about 20 active portfolio companies in fintech, 50 in all. And thanks for including us.
Thanks. Kyle Griswold, I work for FTV Capital. I'm a principal there. FTV Capital is a growth equity fund focused on the financial services vertical and the surrounding ecosystem. So we focus on, banking, insurance, asset management, specialty finance, and then the business services and technology companies that serve into that space. Most recently, I guess, and most topical, we invested in a company called World First. It's based out of the UK. They're actually in the FX payment space. We think the leader in that space. But we've looked at a number of FX-related companies over the years, so happy to be here.